Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Good start to the week for the Indian markets. The Nifty and the Sensex gaining more than 1% each. Retail inflation is expected to cool off in February. Industrial production may also show a dip in the month of January, says a Bloomberg poll. Commercial and two-wheeler sales continue to grow at a healthy pace, shows SIAM data. Passenger vehicles lose steam in February. Selective investments and active participation make India the best market for Blackstone. Maharashtra Chief Minister Devendra Fadnavis is meeting farmers' representatives to discuss a list of 5 demands listed by their associations. On the show, we discuss rising interest in Indian infrastructure with Danny Alexander of Asia Infrastructure Investment Bank, pickup and fixed capital formation with Saugata Bhattacharya of Axis Bank, all that coming up in a moment. But let's talk about the markets first. It's been a smart rebound, not just in India, across the Asian markets as well. And you're seeing that confidence sort of come back in the markets, at least in the first half of day today. Neeraj is here with a closer look at some of those stocks that have been moving.
Now, the fingers are crossed that we don't see this waning off in the second half, Harsha, because until now that's pretty much been the script. But we're holding on to this 1% gain for almost the entire trading day today. And Nifty IT is helping, maybe because NASDAQ did what it did. But if you just look at across the large cap and the mid cap end of the market, it's Nifty IT, which is really doing well, 1.5% higher. For everything from an HCL Tech, I mean, to you name a Nifty IT stock, and by and large it'll be green or maybe a small tick of red, if you will. But I think the larger story, while the market is doing so well, is what's happening to some of the power sector companies and the lenders out there. I think that is what is plaguing the confidence of the market in lenders per se, because PSU banks in today's session as well have seen deep cuts. AIIB Bank was nowhere in the conversation when it came to sketchy names. That one is down 10%. Andhra Bank, we all know, we've been talking about since morning, and the kind of fall that we've seen in Andhra Bank as well. A clutch of other lenders are coming under the soup. PFC, REC naturally out there. Business Standard wrote that story about how the large amounts of money for PFC's loans would be going in the insolvency and NCLT too. So that is what is really out there bothering the street, and which is why in today's session, we've seen, while the large caps have been okay, the Nifty Bank hasn't been doing all that well. It's up 0.5%, and I believe at the highest point of the day right now. But if you look at a closer look as to the trend today, Nifty Bank has been a big stark underperformer, led predominantly by the PSU banks, even though they don't carry so much of weight. And the non-Nifty banking names are out of the Nifty Bank index, but the smaller PSU banks, and the carnage continues there. A clutch of these names fell 19, 20, 25% last week and are trading at fresh lows. PNB at 92 is trading at fresh lows as well. So that's a pocket that is not looking all that great.
Neeraj, thanks as always. That's the markets for you. But let's get you a Bloomberg exclusive. 13 years after Blackstone set up shop in India, India's turned out to be the most profitable market for the private equity giant. The $434 billion fund house did a course correction some time ago, choosing to focus on a few sectors and larger investments, which it looks like is yielding results. Bloomberg News' George Smith Alexander spoke to the managing director or senior managing director of Blackstone India, now joins us with more on the story. George, what's worked for Blackstone in India?
So if you look at it, their investments earlier did not give them the returns which they would have wanted. So starting from 2011, every investment or you know, on a continuous IRR basis, their investments have been giving an IRR of around 30%. It's actually about 30%. This compares to an IRR of, say, around 25% as far as China is concerned. And interestingly, if you look at the pre-Quint data, they say that, you know, the overall India-focused funds give an internal rate of return of 12.4%. So what has gone into this is, you know, they have started focusing on select sectors which they claim that they have deep knowledge. They have started, you know, even before they get in, they have decided on the management or on the operational changes which they would want to get into these companies before they go in. So I guess these sort of changes have helped. And also the other main thing and the other important thing would be larger stakes or big controlling stakes in each of these companies.
Oh, clearly there's been a shift in strategy in that sense.
Yeah.
Any specific example of things that can sort of illustrate this turnaround a bit?
So if you look at SHK, the perfume maker which got listed in 2015, they exited a part of it during the IPO time, and again they made a small exit last year. But if you look at it, the overall return from there, it's at around 6 times. Now that's huge as far as PE is concerned. If you look at the Maldivian operator, which they got out late last year, that's in December, again they would have made a return of around 4 times, got in at around 98 million, exited at around near about 500 million along with other stakeholders there. So, I mean, these are the exits which have actually boosted up the IRR for Blackstone.
And this would make them, these returns would make them among the highest in the world, isn't it?
As far as India is concerned, India is obviously the highest in the world. So obviously, when Blackstone is now out raising money for its Asia fund, obviously these sort of returns would definitely help the fund in collecting money.
George, thank you so much indeed for joining us. That's the story of Blackstone for you. Meanwhile, Indian FMCG stocks may be in for a correction in what's a deviation from the usual trend. The Indian subsidiaries of companies like Unilever and Nestle are trading at a higher valuation to the parent company. Nupur Acharya of Bloomberg News joins us with more details. Nupur, what's prompted analysts to suggest some of these changes, and what really is the difference that you're seeing between the parent and the subsidiary?
Well, India has always commanded a premium given that it is a growth market. So it will always be priced at a higher level compared to the parent FMCG giant. But why are we talking about this right now is because this gap has widened substantially and more so in the last 3 months. So I'll give an example of Hindustan Unilever. It was trading at a premium of 80% over the parent Unilever. Now that gap has widened to 160%. So now therefore people are wondering if the correction has happened in the global parent, Indian companies have held on to the rich valuations. So the question is, will they come down or won't they come down? That is the question.
Interesting. Are you seeing this valuation gap across sectors, or are you specifically focusing on FMCG on
specifically to consumer sector? And the reason why these valuations have held on is because they are betting big on the rural growth. Right? They feel that the rural demand will come, it will pick up, and they will justify the valuations. And if they fail to do so, if villagers don't buy more dental creams, more soaps and shampoos, then there's a red flag there for the valuations for these consumer stocks.
Okay. No, well, thank you so much indeed for joining us. That's the FMCG pack and the valuation differential that you're seeing between the parent company and the subsidiary here in India. It's going to be a busy week for IPOs. As many as 4 companies are looking to raise more than 9,500 crore from the primary market. Somit, when was the last time so many big IPOs opened in 1 week? Give us some details of what's on the annual, really.
So last time it was this busy on the October 29th week when we had 3 companies, that is Mahindra Logistics, New India Assurance and Khadem, which had raised close to 11,000 crore rupees. And now we have 4 companies, that is Bharat Dynamics, Bandhan Bank, Karda Constructions and Hindustan Aeronautics, who are raising close to 9,740 crore rupees from the primary market. So if you see, Bharat Dynamics is raising close to 961 crore rupees. Subscription period is March 13 to 16. The price band is 413 to 428, and the IPO is a complete offer for sale. We also have Bandhan Bank, who's raising close to 4,400. Subscription period is March 15 to 19th. Price band 370 to 375, and the IPO is a combination of offer for sale and fresh issue. We have Hindustan Aeronautics raising close to 4,229. Subscription period is 16 to 20. Price band is 1215 to 1240, and the IPO is a complete offer for sale. Lastly, we have Karda Construction, not a big IPO, but still it's opening on the main board. 77 crore rupees. Subscription period is 16 to 20. Price band is 175 to 180, and the IPO is a combination of offer for sale and a fresh issue. Now, if you see, the bulk of 9,700 crore rupees, that is close to 62%, that is 6,042 crore rupees, is an offer for sale that will be taken up by the promoters and the investors, while 3,698 crore rupees will be a fresh issue. Now, majority of the fresh issue is by Bandhan Bank, which the bank is raising to expand its capital base. Some part of it is from Karda Construction, which the company is doing to repay its debt. Now, let's see what the companies do. Now, if you see Bharat Dynamics, now it is a defense public sector unit, which is into manufacturing missiles. Now it's a Miniratna status company, has 3 manufacturing facilities and is building 2 more facilities. The company has been consistently paying dividends for the last 5 financial years. The order book is close to 10,543 crore rupees, which gives a good revenue visibility for the next 2 years. And the company would have a market cap of close to 7,800 crore rupees on listing. Now, if you see, the company is a sole supplier of surface-to-air missiles and anti-tank guided missiles to the Indian Army. Then we have Hindustan Aeronautics, again a defense public sector company. Now this is not only the largest defense public sector company, but also the world's 39th largest aerospace company which is looking to list. It's an Navratna status company with 5 manufacturing facilities located across India. It has been consistently paying dividends for the last 4 decades, and as of now the company's cash balance is close to 11,600 crore rupees. The company has an order book of 68,000, which gives a good revenue visibility for the next 3 years, and the company's market capitalization on listing would be close to 41,464 crore rupees. The company manufactures aircrafts, helicopters and aero engines, and is also into repairing, designing and developing these products. Now if you see, there's Bandhan Bank also, which is listing. Now the bank started its banking operations in August 2015, and before that it was India's largest microfinance institution. The bank has more than 887 branches, 430 ATMs and 21 lakh customers as of December, and it has a strong presence in East and Northeast India, as it has around 55% of its branches in those regions. The bank has never paid dividend in the last 5 financial years, and on listing the bank's market capitalization would be close to 45,000 crore rupees. Then the smaller IPO, that is Karda Construction. Now this is a Nashik-based real estate company. It has completed so far 17 projects, which had a carpet area of close to 10.5 lakh square meter. And currently it has around 11 ongoing projects and 3 planned projects. The company has never paid any dividend in the last 5 financial years, and the market cap on listing would be close to 220 crore rupees of the company. Now this is the last month of financial year 2018. If you see, so far this has been the best year for IPO for the primary market since 1990. So far 37 companies have raised close to 66,517 crore rupees from the primary markets, and with these 4 companies the total amount raised would easily cross 75,000 crore rupees for the financial year 2018.
Sumit, thank you so much for that. That's the action in the primary markets, a bunch of IPOs lined up. But there's also been increasing foreign interest in the Indian infrastructure story. Take the recent NHAI's first TOT, or the toll operate transfer model, won by Macquarie, the Mumbai-Pune Hyperloop project, or the Japanese investment in the bullet train project. What's making Indian infrastructure investments attractive for foreign players? Let's discuss the impact of that with Danny Alexander, Vice President and Corporate Secretary at Asian Infrastructure Investment Bank. Danny, thanks so much for joining us.
It's a pleasure to be here.
Quint. You've been focusing on the investment story. You've been invested in India. You've invested about $1 billion here in India, something like the Bangalore Metro, for instance. What's been your experience so far, and why are you bullish about the infrastructure story in India?
Well, since the AIIB was founded and started work in 2016, we've invested, as you say, about $1 billion, a little more than $1 billion in India. We have another $1 billion or more in the pipeline for this year. We've found very good quality projects. We have found a system that is bringing forward more and more good infrastructure projects. Some of the examples you mentioned also show the changes you've seen in India in recent years. The better, more predictable regulatory systems, the increasing focus on PPP as a solution for some kinds of projects, but also some of the financial innovation that's going on in India to bring more private sector money into the infrastructure space. We're at the moment, for example, considering involving ourselves in the proposed National Infrastructure Investment Fund.
The NIIF.
The NIIF, which is a very innovative idea. There are other financial innovations too. So I think India is a good place to invest in infrastructure. Of course, like every country, there are challenges, to do with project implementation.
What would those challenges be? I ask because the infrastructure story in India, while everybody talks about the potential, has been ridden with last mile challenges, issues of execution. What have you seen specifically?
Well, as I said, the AIIB is a new multilateral institution. So at the moment, we've invested in projects. Those projects are currently in process. None have been completed as yet. So we don't have that experience from our own kind of projects. But you see, not just in India, but in other countries around Asia, issues about project implementation, issues about land acquisition for infrastructure projects, which are very large scale often, issues about local regulations. Obviously, as an international multilateral financial institution, we have very high standards in terms of environmental and social safeguards. Sometimes implementing those things also takes a little bit of time. But in general, we find, looking across Asia, India is a very good place to do business. We see a strong pipeline of projects coming forward, which are helping to power the Indian economy forward.
We're talking at a time, Danny, when the first sort of TOT model for highways in particular has gotten extremely good response, and it looks like many stakeholders are happy with the solution. Do you believe that, from a policy framework standpoint, that India is moving the right direction as far as attracting investments is concerned?
Well, it certainly seems that way. And in a sense, the proof of the pudding is in the eating. If investors are coming forward for these projects, then something has obviously been done right in the way they're being constructed. And I think in India now you're seeing more interest in different kinds of PPP, public-private partnership models for different sectors, not just highways, but for water and other sectors too. We're looking at the moment at investing in the Mumbai Metro, for example, which is a massive investment in this city where we are at the moment. We'll be potentially investing in the Line 4 project there, which is sponsored by the state government, but where, as an investor, we can get involved in supporting that project. And so, we see more of those models coming forward, and that's a good way to attract more private sector investment. If you look around Asia, the infrastructure financing gap is so huge that the resources that come from international institutions like ourselves, or the World Bank, or the Asian Development Bank, or the resources from governments, those are far too little on their own to fund all the infrastructure that's needed. That's why bringing more private capital into infrastructure is so key. It's actually one of the issues that the AIIB will be focusing on in our annual meeting, which is here in Mumbai in June, when the finance ministers from our 84 member countries will come together, really to look at, as an institution, how can we help to bring more private capital into infrastructure, not just here in India, but across the whole of Asia.
When we talk about infrastructure investments, the comparison with China is inevitable, purely because the size of the infrastructure projects there, and also the rapid pace at which they've sort of implemented it. You're at a vantage point where you're funding projects both in India and China. What's working in China, and where do you think India lags behind?
Well, we're funding much more in India than in China,
although
as
you're
it happens.
Sponsored by
although we're located in Beijing, China and India are the two largest shareholders in the AIIB. In China's experience over the last 40 years has been one that's seen a lot of successful projects implemented, as well as, I guess, they've learned from some mistakes. I suppose the political systems are very different between China and India, but I think that what India is doing now with the stable regulatory frameworks, with innovative financing models like PPPs, for example, will help to ensure that India can deliver more and more successful infrastructure projects in the year to come. And the experience, not just of China, but maybe of Korea also, shows that a real investment focus in infrastructure can bring substantial economic development benefits. That's why the AIIB was set up, to help share some of those lessons around many countries in Asia.
Danny Alexander, many thanks indeed for joining us with your views.
Thank you.
Thank you so much indeed. That's Danny Alexander from the Asian Infrastructure and Investment Bank. Let's also get another voice back home on infrastructure. Vinayak Chatterjee of Feedback Infrastructure is also gung-ho on the sector, especially roads. He argues that the shift towards EPC and the TOT, or the toll operate transfer projects, takes away a significant amount of balance sheet risks from construction companies. Listen in.
You look at the roads and highways program is a shining example of the art of the possible. As you yourself said in your starting remarks, the order books of road construction companies in the middle of 2014 was an all-time low of even a little less than 1x of their turnover. Today it is touching 3x. So you can see that the order books are in good shape, and that is resulting in derived demand for construction equipment. I believe demand for construction equipment is growing at a startling pace of 60 to 70% is the increase in demand. You can check this out with construction equipment manufacturers. There is a robust demand finally for cement. Steel is shaping up. So all the indices that lead to the conclusion that the sector is in good times is all there. They're all adding up. Over and above that, we have been complaining that PPP is dead, private capital is not coming in. Now 43 hybrid annuity road projects have reached financial closure. This is PPP. It may not be the old BOT format of the UPA government, but it is PPP. Private capital is coming in, and the recent TOT bid, where Macquarie won the bid with a 9,500 crore bid, far exceeding NHAI's own expectation of 6 to 7,000 crores, shows that foreign investors and Indian investors are very upbeat about the prospects of the road sector. So to answer your question, it is certainly an attractive sector. It is delivering well, and God bless the people who are leading this charge.
Actually, just on that point, I was reading your Twitter handle, Mr. Chatterjee, and you mentioned that this TOT bids, while Macquarie may have won the first bid, according to you, the real winner is NHAI. Why do you say so, one? And two, what would the difference be in kind of the IRRs that a company which is winning a TOT bid versus the erstwhile bids, if you have some sense here, if you have some thoughts here?
Look, on IRRs, I don't want to comment. That is, you know, these bids are a complex model building of capex, periodic and regular capex, of expansion when traffic increases, of their own estimations of GDP growth and traffic. So I'm sure each bidder has his own expectation of capex, of IRR. It is not for me to comment on that. But the fact that people who are very, very intelligent players worldwide, Macquarie, Brookfield, these are all very, very seasoned investors. And the fact that they found it comfortable to bid in a range from 6,500, 7,000 up to 9,500 shows that they're, even with all the risk management, their expectations of IRR are sufficient to have crossed the hurdle rate for allowing their managements to bid. So I don't think IRR is any constraint. Why did I say that it is NHAI is a real winner? Because a TOT is a very complex bid. You're taking money up front and handing over a state-run brownfield utility, an operating project, with all the complexities across the next 20 to 30 years, and you have positioned it in a manner that people have found it comfortable to bid. And so it has taken a lot of doing, a lot of pre-bid meetings, a lot of homework with domestic and international investors to create a package that ultimately make it viable for private investors to bid. So that's stage one. And stage two, it is the resounding success of the bid in a sense vitiates NHAI's own policy of moving into asset recycling of brownfield assets, and they got a bid beyond their expectation. So in a sense, while Macquarie is clearly the winner amongst the bidders, in an overall context, it is NHAI which has, I think, emerged as a winner by proving a point that it can get significant expert world-class investments in operating assets. So that's really the reason.
Okay, one thought, Mr. Chatterjee, on companies that will be, and not really, I mean, I don't want to stock recommendation or anything, but the size of order books and the balance sheet strength that Indian companies have. I mean, 6 months ago, the conversation was that the orders will come out thick and fast. We have a Larsen & Toubro, which is a large player, and then a string of small players, and whether or not their balance sheets can really take on the increased order inflows. Now, we already know of the bulging order books that almost all the mid-sized corporates already have. What happens in 2018 and 2019 when the pace of ordering of NHAI picks up?
No, so why would you be worried about it? I think as you rightly said, the major participants, as you can see across these, there's funding coming in from the international investors. So they are not dependent on the Indian banking system, if that is your worry, that the banks are going to be shy of lending. Where will people find? I mean, if Macquarie is bid 7,500 crores, Macquarie has the necessary financial muscle to see that its TOT bid is sustained. Now, if you look at various other, in the middle of all this crisis, 43 hybrid annuity projects have got financial closure. So that is fact. Under the same stress of bankers and NBFCs and foreign funders and ECBs, they have reached financial closure. When a company, and really the robust growth is coming from the, as you rightly said, the mid-sized, mid-cap construction companies. Their rise has been very, very positively startling, to say the capacities and the professionalism that they've built up. Many of them have IPO'd, and their balance sheets are sufficiently robust for them to access various modes of funding. It's not only restricted to PSU banks. I mean, they can get funding from overseas, they can get funding from NBFCs, they can get funding from public financial institutions, etc., etc. So, and once you have a definitive contract on hand, it makes, and NHAI is standing behind it. I wouldn't worry about financial closure or the ability of these EPC companies to rise to the occasion to implement their projects on time. I wouldn't worry about it.
All right, that's Vinay Chatterjee from Feedback Infrastructure. The big story today, more than 60,000 farmers across the state have gathered at Azad Maidan. Some of them are walking all the way from as far as Nasik. A delegation led by office bearers of the All India Kisan Sabha have now gone to meet the Chief Minister of the Vidhan Sabha, while others are waiting at the grounds, waiting to hear from their representatives. Ayush and Alex, who are at Azad Maidan, who've been talking to the farmers to find out their demands, join us with the latest. Over to you guys.
Okay, start. Right, so Ayush, it's been a busy morning and afternoon so far.
And all they can see is what we can see. It's a sea of red here at Mumbai's Azad Maidan. Well, it's different from other protests that have taken place in Mumbai. In fact, the farmers who are protesting for a number of things which we'll get to have been very well organized, and they've been very considerate about Mumbai as well. They planned this in the night so that they don't disrupt traffic and normal life in Mumbai, and everything has been organized. The numbers are subdued as well.
Well, absolutely, because and you see various demographics of people supporting this. You've had representations from various political parties that have come by and made their support known to the farmers that have come here. But we've got a couple of farmers here with us. On my right, now Sanga.
गणपत काशीराम बागुल.
Well, that's his name. तुम्ही कुठनं आलेत आणि कसं आलेत?
नाशिक जिल्ह्याचा सुरगाम तालुका.
आणि कसे आलेत तुम्ही?
आम्ही तिथून गाडीने आलो नाशिक पर्यंत. नाशिकहून आम्ही जीवा पांडू गावीत आमचे नेतृत्व त्यांच्या नेतृत्वाखाली नाशिकहून पायी चालत चालत मुंबई पर्यंत आलेलो.
आणि किती लोक आले तुमच्याबरोबर?
आमच्या बरोबर तिथून निघालेलो तिथून 8,000 लोक होते. तिथून रस्त्याला लागलो तिथून लोकसंख्या वाढत गेली. इथं मुंबई पर्यंत लाखाच्या पुढे लोक गेले.
Okay, so, well, what he's essentially said that he started off from Nashik and he was joined on foot, and he was joined by several people. He started off with 8,000 people, and that number, as we know, did swell by the time that it reached here.
No, absolutely, and there are a number of demands. I mean, there's thousands of stories that we can document, but we have a short span of time to actually document them. So on my left, I have with me another farmer, Pankaj Deshmukh, who, of course, has lands in Amravati here in Maharashtra, but he lives out here in Mumbai, and that's a story that a lot of people here in Mumbai. There are farmers who are settled here and will essentially have agricultural lands all over the state and the country. Pankaj, I want to start off by asking you, people have really had a long, grueling sort of journey over here, 180 kilometers on foot. You've joined the protest on a work day. Do you share your demands with the farmers from the rural areas?
Yeah, actually, there is nothing like my own demand. It's a demand of farmers who are joined here in thousands. They have walked for 120 kilometers right from Nashik to Mumbai with barefooted that you can see here. And being a farmer and the son of farmer, it's my duty to join them to support them. And I am also having my land in Amravati. I have also worked with the Kisan Sabha in before 15 years back. And now it is that I think that all their demands that government should consider with sincerity. And they should not go back with the empty hand from here. Absolutely, they will not go back because they have committed and they have come here to settle all their demands.
Okay, but Pankaj, we've been speaking to the organizers as well, Alex. From what I understand is that in the event that the government, Chief Minister Fadnavis, does not accept these demands, what is the next course of action for everyone out here? For the Kisan Sabha, for all the farmers who've gathered here?
They have cleared it from the day one that if the demands are not met, they will not leave this place, they will not leave the Mumbai, they will stay here unless and until their demands are to be met.
All right, well, that's obviously the call to arms, so to speak, and the fact is that they plan to gherao the Legislative Assembly at some point. But, we did speak to the head of the organizing entity.
Alex, we did, and there were a number of things that he listed, but also, like Pankaj was saying, just imagine that thousands of farmers, this has been a protest which has been very well organized, very different from the Maratha Kranti Morcha protest we saw a while ago, which were for reservations, which were for justice for Kopardi, and which were also for the implementation of the Swaminathan Committee recommendations. They also want that over here, Alex, from what I understand.
So in fact, we spoke to Mr. Davale, who is the head of the AIKS, that's the organizing entity really for this protest. And here's what he had to say, the main demands that he has made.
The AIKS has organized this long march.
Yes.
Right from 6th March, and now today is the 7th day.
Yes.
From Nasik, we have reached Mumbai, a distance of almost 200 kilometers.
Yes.
It started out with about 15 to 20,000 farmers. Now the figure has gone up to over 60-70,000. Okay. So this is itself a very, the burgeoning support that we are getting. Now you see the main demands on which we are concentrating on. Loan waiver to the farmers, number one. Implementation of the Forest Rights Act, which actually should vest land in the names of the tribals who have been cultivating it for the last several generations. Thirdly, remunerative prices for agricultural produce as per the Swaminathan Commission recommendations. Fourthly, pension for poor farmers and agricultural workers. Fifth, there has been a very bad attack of this pink bollworm on the cotton crop in Maharashtra, which has led to losses of the tune of 12,000 crore rupees in Vidarbha and Marathwada, which are the endemic areas of farmer suicides. Right. And exactly those areas are affected. Right. Now, on all these issues, then there is another thing like the forced land acquisition for fancy and elitist projects like the bullet train from Mumbai to Ahmedabad, etc. So, on all these issues, we have taken this up, and we are going to make it a fight today in the negotiations that are there in the afternoon.
Okay, that's the voice of the All India Kisan Sabha speaking to Alex and Ayush at the Azad Maidan. The meeting between the Chief Minister Devendra Fadnavis and the All India Kisan Sabha is going on currently. We'll keep you updated. But meanwhile, let's shift focus to what's going on in China. Chinese President Xi Jinping can now rule forever. The National People's Congress voted to officially abolish the two-term 10-year limit on the presidential term. Only 5 delegates out of 3,000 voted against the measure. Bloomberg's Tom McKenzie joins us from Beijing with more details on this one. Tom, thank you so much for joining in. More power to Xi.
More power to Xi. There was no surprise that this decision was going to be made on Sunday when the National People's Congress and the delegates gathered at the Great Hall of the People in Beijing, all 3,000 delegates. As you said, there was a very low level of dissent, just 2 people voting against, 3 abstaining, 2,958 voting in favour of this. No surprise, but nonetheless a momentous moment for China, doing away with these presidential term limits and, crucially, a system that's been in place for almost 3 decades to ensure that there is collective leadership right at the top of the leadership here in China, that there isn't one strong man with all the power. That system has been done away with. The Communist Party says China is in a different phase, that President Xi Jinping needs time and space to enact his policies, to push through reforms that will tackle debt and pollution, to ensure that China is a moderately prosperous society by 2020, and to ensure his role on the global stage. But there are those who say that short term this may lead to increased stability, but longer term there are question marks about the lack of checks and balances on President Xi Jinping's power, and therefore potential uncertainties around policy missteps.
Tom McKenzie, many thanks indeed for joining us. Tom McKenzie reporting from Beijing there on Xi Jinping. Coming up next on the show, we discuss the pickup in fixed capital formation with Saugata Bhattacharya of Axis Bank. That's coming up on the other side.
बढ़ो 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 मेरे संग बढ़ो 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 मेरे संग बढ़ो 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 बढ़ो
कुछ इसी तरह बच्चों के साथ साथ बढ़ते हैं LIC के चिल्ड्रंस प्लान्स, जो दे आकर्षक भुगतान बच्चों की हर बढ़ती अवस्था में।
बढ़ो 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 मेरे संग
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Emerge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels. And our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
We're back on Power Lunch on Bloomberg Quint, the headlines at this hour. Good start to the week on the Indian markets, the Nifty and the Sensex gaining more than 1% each. Retail inflation expected to cool off in February. Industrial production may also show a dip in the month of January, that's according to a Bloomberg poll. Chinese parliament repeals presidential term limits, paving the way for Xi Jinping to stay in power beyond 2 terms. Quick check on the markets, really. There has been a smart rebound across Asian markets, and you're seeing that confidence building across the screen here in India as well. The Nifty is clearly up about 1.5%. So is the Sensex. Yatin has been taking a closer look at some of those stocks that have been moving in the last 30 minutes. Yatin.
Afternoon, Harsha. And if you look at the Nifty, clearly the advance decline ratio is quite favorable, 42 advances to 8 declines. So the market bet is extremely good when it comes to the large cap. Of course, we have been hovering around that 10,300 mark for the last 1 week, and probably we are looking at some consistency or some good data points globally, because of which we are looking at some strength opening this week. ITC, Bharti Airtel, HCL Technologies and Infosys are the top gainers in trade. In fact, both large cap IT and mid cap IT are doing well. Of course, the laggards include pharma majors like Aurobindo as well as Cipla, SBI, Ambuja being the other top losers on the Nifty. However, if you look at the market point from the mid-cap end, we are looking at some pain really coming in. In fact, we have nearly 47 stocks above the 500 crore market cap hitting fresh 52-week lows. Of course, that includes a whole host of small and mid-cap PSU banks. So we have the likes of Union Bank, Andhra Bank, UCO Bank. In fact, PNB also has hit a multi-year low today. UCO, Corporation Bank, Bank of India, and you name them. And the name should be on the 52-week low list. So clearly, when it comes to the PSU banking lot, still there is a lot of pain in trade today.
Okay, let's talk about the automobiles. Yatin, automakers continue to sail through February. Vehicle sales have jumped nearly 23%. base effect continues and momentum continues as well, isn't it?
Yeah, clearly. If you look at the commercial vehicle segment especially, that has seen a good growth in the month of February. In fact, if you look at the medium and heavy commercial vehicle sales, they were up 23% for the month of February on a year-on-year basis. Scooter and motorcycle sales also saw a good growth on the back of rural demand picking up. So we have almost a 25-26% kind of a growth coming in as far as the two-wheeler segment is concerned. And if you look at it from the overall industry perspective, the total sales for the auto body, which the auto body has reported in the domestic market, is nearly 23%. And interestingly, passenger car sales, despite those higher bases last year, has seen a growth of 4%. So probably, the commercial vehicle side and the two-wheeler side are looking at good growth on the back of economic recovery and the rural recovery.
Let's, in fact, listen to Vishnu Mathur of SIAM, who had to say what this would mean in the medium term.
The rural markets have already improved quite a bit. In fact, the good numbers that you see, particularly in the two-wheeler segment this time in February and also April till February, is largely because the rural markets have come back on stream. And you're seeing a very good growth in those markets. And almost 50% of the two-wheeler sales come from the rural markets.
We have seen over 20 to 25% growth rates for two-wheeler and scooter sales. So do you expect the momentum to continue?
Well, we'll have to wait and see. The numbers are very large. The base is very large. For the first time this year, I think we will be crossing the 20 million mark in terms of sales, which is a very, very large number. So when you have such a large base, you may not be able to maintain a 25% growth rate consistently. But I think even if you have a lower growth rate, we would be very happy, because on such large base, even a lower growth number would also mean that there is very decent growth happening in these sectors.
Okay, that's the automobile sector. That's a view from SAM on the rural growth. But we may be at the cusp of a long-awaited revival in the investment cycle. Government's revised estimate for growth in the current financial year saw a pickup in the critical segment of fixed investment and capital formation. Is this an indication of the economy gaining momentum, and what's going on? Let's discuss this with Saugata Bhattacharya, Chief Economist at Axis Bank. Saugata, pleasure having you as always in our studio. Let me begin this conversation by asking you about the point that you made about fixed investments and its contribution to growth. This is for fiscal 17.
Right. Started from 17 and it's continuing into 18.
What is the inference that you're making?
No, so I mean, this is the, so obviously from the GDP data, we are on the cusp of a recovery, and not just the cusp of a recovery led by investments, which is the basic key problem in the slowdown that we have seen so far. You've just heard the SIAM numbers on commercial vehicle sales, very high. Commercial real estate, from all the news that we hear, is at very tight levels, 6%, 7% vacancy rates. All over the place. Yeah. So I think there are definite signals that what we are seeing in the GDP data is actually reflective of something that is happening in the system. And we keep hearing about investments. Small 200, 500, 800 crore projects that are being set up. Some part of it is replacement capex, but other part is also expansion capex, some visible signs. So from that ground level perspective, the numbers that we are seeing in the GDP numbers, particularly investment, I think there is a semblance of reality embedded in those numbers. But when you try to triangulate this with the GDP numbers, with other indicators, that more high frequency indicators, more real time sort of indicators, whether it be the PMI numbers, the new expected orders, export orders, there seems to be some variance. FY17 particularly was just after the demonetization exercise. Companies were beginning to adjust to the oncoming GST numbers. So that is the slight bit of disconnect that we see in the GDP numbers. But having said that, there are many other indicators which seem to suggest that these numbers are somewhat reflective. And the key puzzle that's coming in from the numbers, and we have discussed this before as well, this is coming in from what the government classifies as the household segment.
Sure.
Now, within the households, there's a large part which are these very, very small firms, the micro of the MSMEs.
Sure.
The proprietorships, the small kirana shops, etc. So, and the recovery in investment, fixed investment,
if I can just interrupt you there, could you talk us through this chart that we're seeing on the screen? This is of the point that you're making of household investments. We are actually saying that private sector, private investments have been consistent. While they've fallen from fiscal 13, there's been a sharp fall, but they have been relatively steady. The guys who've seen a sharp turnaround is the household investment. Am I right in saying that?
That's right, absolutely. I mean, if you notice the chart to the right panel of the chart, that's exactly, so the yellow line is more or less consistent, the green line is more or less consistent, that's the government and the corporates, the private sector corporates.
It's the purple line.
It's the purple line which had dipped sharply and now has gone up sharply, and all the growth rates are now converging towards that 11-12% that you're seeing.
What would constitute this household investment, and what's the inference?
So what is household investment? This is households, people like us. We do our own investments in housing, in homes, etc. Some part in what the government is classifying as machinery and investment. Some part would that be investments in some automobiles. Again, coming back to the Siam numbers, coming back again. But mostly, I mean, the large part of that is coming in from the very, very small segments. Again, I mean, coming back, the proprietorships, the small kirana shops, the very small auto dealers, etc. Both from services as well as manufacturing. So it is this segment that seems to be propelling investment going, I mean, in FY17 at least. And we don't have the breakups for FY18, but from that 11% odd investment that we are seeing in FY17, FY18 is again 10%.
Would it be incorrect to link this to the after effect of demon, where you're seeing a large part of the cash economy becoming formalized?
There was definitely a significant amount of cash that had gone out of the system, coming back into banks. So, I mean, bank deposits had gone out. I'm not sure whether this is reflective of that.
Okay.
Because, I mean, I don't see the immediate connect. In fact, what has happened in FY18 is that a significant amount of cash has again gone back into the system, which anecdotally seems to suggest that economic activity, paradoxically, economic activity is back on even keel with this amount of cash. So, I mean, the cash economy is again back to normal. I don't see an immediate connect with real estate, because we had heard that post-demonetization housing had suffered, real estate in particular had suffered. So and the direction of the investments coming in from the GDP data, the two don't match.
Okay.
And together with this, if you see the purchasing managers index, the PMI data, the new order books, the new export order books, in FY17 it actually come down very sharply.
Okay.
In manufacturing, in services, all the way to July 17, October 17 in some cases, it dipped steadily. There's been a pickup from July, September, October, November onwards. But again, it's very, very weak and nowhere close to the 11%, 12%, 10% fixed investments that you're seeing in the GDP.
Okay. One final question on this one. How do you then correlate the spike you're seeing in the household investments to the savings behavior?
Well, savings will automatically follow some part, because, I mean, households have two forms of savings, the physical savings part and the financial savings. Physical savings is what households put in directly into housing, cars, buying cars, etc.
Okay.
That is to say that don't take loans from the banks. So that's one part. So that part is more or less stable. It is the financial savings which has gone up. So financial savings, so one part of the interpretation is that the post-demonetization, the amount of money that had come into banks is actually being put to use in doing some investments. The rest needs to be figured out.
Okay. This is an interesting report that Saugata is trying to explain of what's going on in the fixed capital formation space in the country, and how household investments are perhaps driving this in fiscal 18. Before I let you go, Saugata, we're also anticipating CPI numbers today and industrial production numbers today. Any numbers? Any change in trend?
Not really. I think this is in line. IIP still remains strong, hopefully, around about 7%, plus minus, the IIP numbers. CPI will be about 4.6, 4.7. So it's more or less in line with what the Reserve Bank of India and the government is projecting. IIP remains strong, and we are climbing. So for the next couple of months at least, you will see fairly strong IIP growth. And this is part of the story that is playing out in FY18.
Saugata, always a pleasure. Thank you so much indeed.
My pleasure.
Saugata Bhattacharya from Axis Bank talking about the IIP as well. Let's move on now. Shrimp exporters like Apex Foods and Avanti Feeds are down more than 1% each after the US Commerce Department suggested a threefold jump in anti-dumping duty. Sumit is here with all the details of how this is likely to impact shrimp exporters. Sumit.
So, US Department of Commerce in its preliminary review has determined that certain frozen warm water shrimp from India have been sold at a lower value than their normal value and therefore should be subject to anti-dumping duties. In lieu of this, the government has increased the anti-dumping duties on Indian shrimp to 2.34% from current 0.84% rate, which was finalized in September last year. So if you see, US is the largest market for Indian seafoods, and in fact India is the largest exporter of shrimp to US, and according to the latest January data that we have, shows that the shrimp exports to US have jumped around 49%. So among the listed players, the new rate will be now applicable to ITC, Avanti Feeds, Apex Frozen Foods and Waterbase Limited. Now, however, these rates are now suggested and are in preliminary stages. So we have to still wait for the final rates to come in, and which will still take time. Now, if you see a domestic brokerage house, that is Equirus Securities, is saying that this hike in rates will not impact the export volumes of any shrimp processing company, and will also not impact the margins of the company. Also, they are bullish on the long-term prospects of the aquaculture industry in India, and they are saying that this hike in anti-dumping duty rates will not be impacting these companies. And we also spoke to the management of Avanti Feeds, and he also didn't seem to be concerned about this hike in rates of anti-dumping duty.
Every year it happens the same thing, and the final the duty comes down. The preliminary always, even the last time it was 1.86, then it came to 0.82. Similarly, we are expecting a similar this thing, and India is not dumping. And second thing, the 2.34, even if it stays there, it doesn't affect us much.
That's the management of Avanti Feed. Let's move on now to aviation. New aircraft need a new team of engineers and ground staff to manage them. That's where companies like CFM International fit in. SpiceJet has announced a $12.5 billion deal with the French giant for engine and services contracts spread over 10 years. The tie-up is for the 155 new Boeing 737 MAX aircraft that's going to be added to SpiceJet's fleet over the next few years. The budget airline is trying hard to catch up with the country's largest airline, Indigo, that's been expanding fleet aggressively. That's ever since Ajay Singh came back as the promoter of the company. More news from aviation. A consortium of Jet Airways, Air France, KLM and America's Delta Airlines supposedly are keen to bid for the national carrier Air India. That's according to a news report by the Press Trust of India. This makes it the fourth player to have openly said that they're going to bid for Air India. Indigo is the only Indian airline to have sought to pick up stake in the national carrier. Emmanuel Macron is in Varanasi today. The French president, who is on a 4-day tour of India, inaugurated a 75-megawatt solar plant in neighboring Mirzapur today. The power plant, set up in collaboration with the French company, is the largest in the state. Prime Minister Modi is accompanying Macron, will also take the French delegation across the city. Out of time on the show. Thank you so much for joining us today. Up next is Countdown.